Welcome back to another Stock Sharks case study. Today we're revisiting a name you've all heard, Hostess Brands, the maker of the iconic Twinkie. But this isn't just a story about snack cakes. It's a story about SPACs, bankruptcies, private equity, and ultimately one of the most profitable buyouts in the packaged food industry. Before the massive SPAC boom of 2021, when hundreds of companies rushed to market with blank check vehicles, Hostess was already ahead of the curve. In 2016, Hostess became public through a merger with Gores Holdings, a SPAC formed by Alec Gores. That deal was unusual for its time because SPACs hadn't yet become a mainstream route to the public markets. Hostess had been through a rough stretch before that. The company actually filed for bankruptcy in 2012, leaving its famous Twinkies, Ding Dongs, and Ho Hos at risk for disappearing from shelves. That's when private equity firms Apollo Global Management and Metropoulos and the company stepped in. They bought the brand out of bankruptcy and rebuilt it. 4 years later, they cashed out by bringing it public with the Gores Holdings SPAC. We first started looking at TWNK stock back in 2018, right before earnings report, for around $12 a share. The stock popped and we sold quickly, thinking the story had run its course. At the time, Hostess just looked like another slow growth food brand. But as it turns out, we sold way too early. Why? Because Hostess didn't just stabilize, it thrived. Over the years, management leaned on cost cutting, efficient distribution, and a steady portfolio of snack brands with consistent consumer demand. The market eventually rewarded them, and in 2023, the company was bought out by the JM Smucker company for $5.6 billion in a cash and stock deal. That exit marked a massive premium for shareholders and ended Hostess's chapter as a public company. The takeaway? Sometimes boring consumer names can turn into multi-billion-dollar winners, especially when strong brands and loyal customers are involved. And in this case, Hostess Brands not only survived bankruptcy, but also became one of the first SPAC success stories, years before the craze truly began. Now, as usual, this isn't financial advice, just for educational purposes only. But if you're looking to get an edge on the markets, become a member today. The link is in the bio.